Europe's debt crisis returning full circle to the problem it started over a year ago. How to save the malfunctioning Greek state from running out of money. With more on Greece's choices, what they mean to Europe, we bring in Jacques Caillou. He is the chief European economist for RBS. He's joining us this morning from London via telephone. Jacques, thanks so much for joining us. Until this morning, Germany was pushing the idea that Greece should hold talks with its private creditors about extending the maturity of its bonds. Now it seems Germany is backtracking. A senior government official said it would cause bigger problems than just easing the terms. Why do you think Germany is changing its tune, if you do at all?
Yes, good morning. I mean, our view is basically that Greece will receive additional help. I must say, it's extremely difficult at this stage to distinguish between noise and signal across the spectrum and across the region. Now, what we have seen is, from the official statements, is that it is more likely that Greece will get better terms on its existing loans, and there is an increasing possibility that additional support will be considered for Greece. Whether it's next week or over the coming month remains to be seen, but it seems to me that the policymakers are aiming at this stage to take the route towards more support rather than opening the door to any potential restructuring, which is obviously a scenario that has gained traction in the market since the first sort of rumors and leaks started earlier in April. But at this stage, it feels to me that what we will get next week in a very important Eurogroup meeting is additional support for Greece, with concessions as well, obviously, being requested for Greece.
So you do think, in fact, that next week it's possible that leaders will find a solution. But I've heard, for example, that Greece's austerity measures maybe have been too crippling for the country. How likely is that to figure in the discussion?
Well, I think certainly the discussion will feature what Greece can do in exchange of additional help, and the question is about additional potential fiscal measures or indeed stepping up the pace of the privatization program, which was laid out on April the 15th by the Greek authorities, and pinning down the details of that privatization program and whether this program might be used as collateral potentially to new loan facilities. There's also the possibility of using the FSF, which is available for lending to any euro area country. So I think this is what we're looking for in the short term. Obviously, the market is convinced that the restructuring event is inevitable, and I think that those announcements that we might get next week, although bringing some short-term relief to an imminent restructuring, will not solve the more long-term issues that the market is still struggling with and will continue to struggle with for some time, i.e. whether those countries will have to restructure at some stage. And this is only Greece, Portugal, Ireland facing the same issues. These countries will have to return to the market within the next year or so, and will also face the same funding crisis that Greece is now facing for 2012. So this is unlikely, certainly not going to be resolved over the next ECOFIN meeting or Eurogroup meeting.
Jacques, we thank you so much for the time. Jacques Caillou joining us there. He is the chief European economist from Royal Bank of Scotland, joining us there on the phone. Of course, some saying if a solution is not found, a messy default for Greece could be as powerful as the failure of Lehman Brothers.